Is getting to an 850 credit score even possible? I truly love it when the haters come into the comments and they say, a credit score is a scam. Or the favorite Dave Ramsey line, a credit score is designed to keep you poor. Or my favorite, I'm just tired of playing this game of credit. My credit score goes up and down. I'm just tired of dealing with it. And listen, I get it. Credit is super confusing because nobody ever taught us anything about it. And in case you didn't know, I'm Mexican American. I grew up in East LA. I grew up in the hood in Whittier, California. Now, a lot of people in that specific area is predominantly Latino. And the only thing that we are taught is to work hard. Not once did my parents ever talk about credit. Not once did my parents ever talk about money or banking because we were poor. So on today's video, I really truly want to take it back to the basics of your credit score and teach you something that I was taught as a young man at the age of 26. My godfather actually taught me this at a younger age, but I didn't pay attention to him and I didn't listen until I got older and I realized, yo, my godfather told me everything about this. And he taught me that the 4 pillars of credit are super important for you to have a high credit score. And like I said, I wasn't listening at all. And he called it the 4 C's of credit. He said, as long as you can perfect and maintain and control these 4 C's, you will always maintain a high credit score. And as I found out later in life, he wasn't lying to me. But of course, I had to learn the hard way. I went to go apply for a brand new car. I was making over $100,000 a year. I thought I was big time. And then I got declined because I had no credit. So I had to take it back to the basics. I talked to my godfather and he's like, pero mijo, I explained this to you. I was like, yeah, I know. I didn't listen. I need you to break it down for me again because this is very difficult. But then after he actually figured it out and explained to me the 4 C's of credit, it really wasn't that hard. But before I get into this video, make sure that you smash that like and subscribe button so this video gets out to more people so everyone can stay informed. So what are the 4 C's? They're actually pretty simple. You're looking at credit payment history, credit utilization ratio, credit mix, and credit inquiries. But when people see their credit score drop, they immediately think, you know, it's the credit bureaus, it's the credit card companies, they're all against me. No, you truly control your credit score. That's right, you. You are actually able to control 550 points of your credit score, and you automatically get 300 points just for playing the game of credit. So if you put those together, 550 plus 300, that's 850 points total. So at the top of the 4 C's, you have credit payment history. This is one of the most vital and most important things. People think it's not a big deal when you get a late payment until your credit score drops. You're like, it's not that big of a deal. Yo, why did my credit score drop 120 points? Because credit payment history makes up 35% of your credit score. So you want to make sure that you never, ever get a late payment because one late payment can hurt your credit score up to 5.5 years. That's right. That's a long time. We want to maintain that credit payment history at 100% positive payment history. It's really just that simple. You pay on time, always. Always make sure to put everything on auto payment to come out of a checking account, not a debit card, because if your debit card is compromised, then what could happen is you forget to actually update your information inside of your credit card or wherever it's coming from, whatever payment you're taking from, and then guess what? You get a late payment. You'll never ever miss a payment if it's always connected to your checking account or your savings account if you want to do that also. And the next one on the 4 C's is credit utilization ratio. Everyone on the internet is arguing about this one. You got to use this. You got to leave a balance. You got to use this much of your credit card. But the name of the game is to always pay it off in full every single month, because my goal is to make sure that I travel for free and the bank makes no money on interest from me. A 29.99% interest, a 20% interest means nothing to me as long as I pay off the credit card in full every single month. Guess what? I pay 0 interest. Credit utilization makes up 30% of your credit score. This is why it's high impact. Anytime you're reporting more than 9% utilization, you're going to start losing a lot of points. Now, we've seen theories out there that you can carry up to 30% utilization. Absolutely not, because the moment you cross the threshold of 9%, you start to bleed points. Yes, that's right. And people say, well, what's the point of credit if I can't carry a balance? It's not your money. The point of credit is to use it to your advantage. It's not an extension of your wallet. It's not an extension of your paycheck. And it's very important to understand that credit utilization is only solely based on your revolving credit cards, not your installment loans, not your car payment, not your student loans, not your mortgage. A lot of people think that if I actually pay my car off or I pay my student loans, my credit score is going to shoot to the moon. Actually, it's not. Your credit score is going to drop because you're closing an account. The only thing that you're gaining from that is you're showing that you're a responsible borrower, and it's building positive payment history, which of course makes up 35% of your credit score. That's why it's high impact. But remember, the only thing that controls your utilization is your revolving credit cards, and that is it. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using Dispute Beast, the most advanced AI credit repair software ever created, and specifically to Wesley, Wesley's credit score went up over 226 points after just 2 rounds with Dispute Beast. And also Marcus's credit score went up 337 points after just 2 rounds with Dispute Beast. And let's not forget Richard's credit score went up 446 points after just 1 round with Dispute Beast. Dispute Beast is going to be pinned at the very top of the comments and in the video description for anybody that needs to fix their credit. Last part's the most important. Now let's move on to C number 3, credit mix. This is what people get wrong all of the time. They don't really understand what credit mix means. It really truly means just that, credit mix. It's a mixture of the different types of credit that you have on your credit report. Now, I always tell people you want to only have anywhere from 3 to 6 credit cards at max if you're just a regular person. Now, I have a lot of credit cards because I get them, I test them out. I want to see how the banks react, what they do, how they treat me, so I can come back and bring those data points. But normal, everyday people should only have 3 to 6 credit cards at max. You want to have some type of installment loan. That can be a car loan, that could be a mortgage, that can be a personal loan. Remember, installment loan basically means you borrow some money and you're going to make monthly installment payments. Now, I'm not telling you to go out there and you have to buy a car, you have to buy a house. That's not what I'm saying. I just want to give you a real explanation so you could truly understand what credit mix means. Credit mix only makes up 10% of your credit score, but as a good example, let's say for instance, you only have credit cards. You don't have anything else on your credit report, then you want to go buy a car. Well, guess what? Even if you have a 725, a 745, even an 800, and you only have credit cards, you're going to get hit with a massive interest rate because you have no installment loan. You see what we did there? Because your mix of credit is actually not prepared and actually placed right on your credit profile. So when you go apply, they're going to say, oh, he has no car loan, he has no installment loan. And that's easy to fix because you could just do a secured loan with your credit union. This is why I love credit unions, because you can do secured loans and build up those installment loans on your credit profile. And car dealerships love to see this. Mortgage companies love to see this because you're trying to get another installment loan. And here's the other part that people never get right. With credit mix, that is also talking about the mix of types of credit cards you have. So I have some American Express credit cards that are charge cards. Then I have some regular, cashback credit cards. And then I have an actual medical credit card. And then I have a store credit card. You see the different mixtures, but it has to make sense for your lifestyle. I'm not saying go get a bunch of credit cards. You don't need to do that. But understand, if you're going to do it right so you can actually build your credit profile up. Because remember what we said earlier, it doesn't matter if you have an 800 credit score. You can still get declined because your credit profile is trash. And I'm going to tell you something that nobody's talking about right now. We are seeing the highest level of denials on credit cards, loans, and different types of things because banks are now starting to tighten up because of how the economy is moving. So yeah, maybe in the past they would accept a 680, but now they're pushing it all the way up to a 725, but also based on what your credit profile looks like. What's your utilization? What the 4 C's of credit on your credit profile look like? That's what lenders are going to be looking at more than ever when the economy is not doing so great. I'm literally preparing you for any situation in life. As long as you follow the 4 C's, you're always going to maintain a high credit score and have a great credit profile. That's what banks want to see. Now, the last and final one of the 4 C's is credit inquiries. Every time you apply for a credit card, a loan, whatever it may be, now your score is going to drop slightly. Even if you get denied, the most points you can lose per the FICO scoring algorithm is 6 points. So people are like, I lost 20 points. It's not, no, you didn't, okay? Stop saying that. Stop looking at Credit Karma. Credit Karma means nothing because FICO is used by more than 90% of lenders, and that's the only credit score that matters. People always ask me the question, well, okay, well, how many hard inquiries or credit inquiries should I have on my credit report every year, every 24 months? Every 24 24 months, you want to have 2 to 4 maximum hard inquiries on your credit report. You shouldn't be applying for credit all the time, because all it does is it makes you look like you're thirsty, like you're starving for some money, like you're struggling. The banks see right through it. Even though credit inquiries only make up 10% of your credit score, they are high impact when you want to go get a credit card, when you want to get a car loan. If you have too many hard inquiries, you could literally get declined for a bank account. Isn't that crazy? Yeah, because they think that you're looking for money. Either you are or you're not, or whatever you're doing, it looks bad to the bank. So keep your credit inquiries down to a minimum of 2 to 4 every 24 months. Honestly, if it were me, I would just say have only 2 hard inquiries every 24 months. Why are you constantly applying for credit? You shouldn't be, because remember, credit is not an extension of your wallet. It is used to actually get to the things that you need in life: a home, a car, credit cards, to travel for free, get cashback rewards. That's what you should be using your credit for, not actually searching for money as a lifeline, because that will get you hemmed up and will get you in trouble, and then you'll be in a bad position trying to figure out how to delete a charge off or a collection. Let's put my chart up on the screen so you guys can see how many points you actually get and you can actually control per category. So for payment history, you're going to control 192.5 points. For credit utilization, you're going to control 165 points. For credit age, now we didn't talk about that. That's not in the 4 C's, but it should be, but it's not, okay? You're going to have 82.5 points. Now credit mix is 55 points, and then inquiries is another 55 for a total of 550 points that you control. And you're probably wondering, well, why is credit age not one of the C's and why is it not 5 C's? Because if you follow all of the 4 C's, the 5th C just falls into place like as it should. You're already doing all the right things. You're not applying for a lot of credit. You're maintaining your payment history. You're maintaining your utilization low. You got a good mix of credit. Then guess what? Your credit age starts to grow, getting you into the 800 club. I hope that I was able to truly make this super simple for you so you can really see that you do in fact control your credit score. You are the master of your destiny, and I'm telling you right now, you can do it. So remember, quick recap, make sure that you always pay on time, keep your utilization as close to 0 as possible, get your credit mix under control, and stop applying for credit. And I promise you, you're gonna be just fine. So I hope you enjoyed the video. We covered another big one on how to get to an 850 credit score easily. Now make sure that you watch this next video, because it is about another credit card that you may want to learn about. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.